Bitcoin and Ethereum just closed the week. Bitcoin is parked right on 63K. Ethereum just defended 189K. Those two levels decide everything this week. First, last Monday's call checked against the tape. Then both weeks replayed candle by candle and the exact maps for the week ahead. And stay to the end because this week the charts have company. One scheduled meeting, one live war risk, and neither of them cares where your levels are. Let's go! Before the charts, the calendar. 3 things can move this market and only one has a time on it. First, the big one. Crypto executives are at the White House on Wednesday afternoon. Eastern, Coinbase, Ripple, Gemini, Robinhood sitting with the Treasury Secretary and the incoming CFTC chair. And reporting says Trump is expected to attend. Expected, not confirmed. Headlines out of that room move coins directly. Second, with no date at all, Iran. The truce was declared over in July. Strikes have resumed around the Strait of Hormuz, and the State Department has told Americans in the region to be ready to leave. That is live, not scheduled, and geopolitical headlines hit risk assets first and ask questions later. Third, the debt clock. The United States is closing in on $40 trillion. Not there yet, and on the current pace it crosses around the end of the month, the slow backdrop. Not a Wednesday trade, one scheduled catalyst, one live risk, one long story. Now, the charts. Last Monday's call checked against the tape. Bitcoin lost 64.5K, 62K still open. After the breakdown, it dropped to 9% toward the target. Ethereum lost 1.9K, 181K still open. After the breakdown, it dropped to 4% toward the target. First, the full picture. A month of candles, so every level on this chart has its history behind it. Now watch the gray window. That is the last 7 days, Monday to Monday. We are going to zoom straight into it and break down exactly what happened to Bitcoin this week, candle by candle. Bitcoin traveled 3% this week between 62.5K and 65K. One directional move. Sellers walked it from the upper boundary down to the lower one with barely a pause. And price is parked right on the level as the week closes. Nothing is decided yet, that is the setup. The week closed weak near the lows too, 8% off the high. Price walked into this zone and is still inside. And look at the red zone up there, twice into it. Twice turned away. Watch August 12th, that rejection is why the back half of this week went down. And this is not new. 64K has turned price away over and over from June through August. This is not a fresh level, it is the resistance that has stopped every attempt for weeks. Price is sitting right under it again. Everything in the map that follows hangs off 63K and the week ended just above it. First, the frame, we are off the hourly onto the daily months of history on one screen. And one standard throughout. Broken means a daily close through the level. A wick is a test, 2 scenarios and one honest third. First, the bull scenario. What if buyers reclaim 64K? Watch the path, the break, then a retest of 64K from above. That retest is the tell, then continuation into 66K. And why 66K? Not some round number nearby. Because price traded into it over and over between June and August and sellers defended it every time. That is a level the market remembers. And the rule is simple, if the break fails and price falls back inside the zone, the scenario is off. Now flip it, the bear scenario. What if 62.5K gives way? Same logic in reverse. The breakdown, a weak bounce back into 62.5K. And then the slide towards 61K. 61K is not a guess. Price fought over that area 6 times between June and July and buyers defended it each time. Same rule in reverse, a reclaim back above cancels it. And if a catalyst does the moving, this does not have to stop at 61K. The red path runs on to 58K, price bottomed there before. What is on the table this week? White House crypto meeting. Iran, us escalation and us debt near 40 trillion. And the one nobody schedules, a shock headline, an exchange failure, a liquidation cascade. A black swan does not respect any level on this chart. That is why this line is the extension, not the base case. And the honest third outcome, if neither breaks, there is no trade patience inside the levels. Only measured levels are marked on the chart. Now Ethereum, same process. A month of tape first, so the levels carry their history. Now watch the gray window. That is the last 7 days, Monday to Monday. We are going to zoom straight into it and break down exactly what happened to Ethereum this week, candle by candle. The numbers for Ethereum: 9% of travel, 185K at the bottom, 192K on top. A choppy one, 4 separate swings inside the same boundaries and no follow through either way. And right at the level, buyers stepped in every single time. That defense is the story of this week. The close, dead in the middle, 5% under the high, still nobody's weak. Buyers defended this zone, and the same story here, 92K has turned price away over and over from June through August. 2 charts stuck under the same kind of resistance. That is the read of this whole week. One line carries into next week, 189K. The week ended right at it, and the same standard applies, not broken until a daily candle closes through it. Same drill for Ethereum, the daily map and the same standard. A daily close through the level or it did not happen. Upside first through 192K. But above it the map is empty, no clean target close enough to name, and that emptiness is information too. And if it goes the other way, 187K snaps. Below it the map goes quiet, no support close enough to call. And the honest third outcome if neither breaks. There is no trade patience inside the levels. And notice how Ethereum and Bitcoin rhyme this week, both constructive, both on their deciding levels. Together, the signal is stronger. The end card holds both maps, one screen, every level. And here is the condition I promised at the start. This week has one scheduled catalyst, Wednesday's White House meeting. Crypto executives at the White House on Wednesday, with Trump expected to attend. A live US-Iran escalation with no date on it at all, and a debt clock closing in on 40 trillion in the background. If it moves, headlines lead and levels follow. That is what cancels both scenarios on both charts. No break. No trade and no chart survives a headline it did not price in. So what do you think about this week's price action? Post your thoughts in the comments and screenshot these levels because next Monday we check every one of them on the same charts.